The story of African energy is one of immense promise, and the leading chapters are still being written.
Thank you very much. Ladies and gentlemen, thank you so much for joining us today to our very interesting fire chat.
You know, we've been doing a lot of work in South Africa. I just joined the company as an explorationist and really trying to understand, you know, some of the petroleum system elements that we're seeing on the offshore. So, you know, in that research and in that data interrogation, we put the pieces of the puzzle together, we feel, which is effectively that you had a really good reservoir system coming in. You had a really fantastic source rock that was around Southern Africa going into South Africa.
I want to get us started right off the bat and ask each of you how this moment has been changing how you all been approaching business development, how you are formalizing new partnerships, and you're wrestling with rising demand.
So just for a little bit of context, hopefully you all know BP, but we are a global integrated energy company. So we produce, refine, supply, and ship fuels from all over the world to a diverse range of customers. And I lead a team that proactively works to grow and protect value with a range of different customers, large complex customers with complex energy needs. So that ranges everything from traditional fuels to renewable fuels to electricity and the like. So it gives, I think, me and my team a really interesting perspective on which to view the current energy dynamics and what we're seeing in terms of changing energy demand, but also supply. So look, I think, you know, and we've heard many panels over the course of the last 2 days. I think fair to say energy demand is definitely rising. Certainly, I think the big difference here now is the shift in electricity around the world, in the US, but also Asia, Europe, et cetera. What I think is interesting now is for us to think about how we actually mobilize the supply to meet that demand and what that looks like in markets like the US as well as other markets. And I think one of the things that we're really seeing is that, you know, geopolitical events, call it, say, over the last 5 years, including over the last few months, have really, I think, brought this to a head for many companies where, you know, a number of years ago, companies were solving principally for decarbonization. It's not that they're not solving for decarbonization anymore, but the things that they are having to solve for have gotten a lot more complex. So this is something we describe as a real optimization challenge. So it's how do you get your energy today? How do you guarantee reliable supplies in the future? How do you manage things like volatility? How do you think about cost and affordability and carbon emissions? And so, you know, these are constraints that companies are in the process of figuring out. And I'm not sure that anyone has the perfect answers, but I think we know that we're going to have to figure this out if we are going to be in a position to build the infrastructure that our customers need to meet their growing energy demand. You know, look, I mean, as you all know, I mean, energy is absolutely critical to promoting economic growth and development, jobs, all those things that we all want. Growth of AI right now taking off immensely. You know, the question here is, can you actually get the electrons that you need to power all of these data centers? But I think also important to recognize it's not just data centers. I mean, there's growth in electrification, EVs, all sorts of things. So it is a complex need that we have. There are two things that I think about, and obviously a lot of talk about permitting reform. If you sort of look at the sort of complexity of laws, regulations that exist, at least in the US, I heard someone actually say recently, it seems like our system is actually more so designed to stop things from getting built than it is to actually get things built. And look, you know, I wish I had a magic bullet solution. I mean, I think if that existed, none of us would be here. but there's not. And so obviously there's going to have to be work across the federal government and the states to figure out, how we actually get things built and done in a responsible way. The other thing that I think about a lot is that I am not always sure that public sentiment is keeping up with, I think, the business community and industry's need for new energy and electricity. It's almost every day that you see a news article about a potential moratorium on data centers, resistance to pipelines, transmission lines, solar farms, you name it. Unless I think we can be aligned around the underlying need and importance for new energy supply, we're going to continue running into obstacles to actually prevent that infrastructure from getting built. So a lot of this comes back to how we engage with communities and help people understand just the extent to which energy and new electricity is so critical to powering, I think, the economic growth that I think we all are invested in for the future.
ExxonMobil, we're a large globally integrated energy company. We are really looking at the global energy markets as they exist today and thinking about the future as well. And, a lot is changing. Just as, to build on what was just described by Marissa, it's a very complicated environment right now. Demand is growing, supply is being challenged by some really complex issues happening in certain parts of the world, in Iran in particular. And we're, leveraging our, global supply chain and optimization capabilities to try to continue to meet the demands of our customers, and are, doing all that we can to maintain reliability of supply and affordability. And as we think about, how priorities are shifting, both from a policy perspective and from a commercial perspective, things are really converging on supply chain resilience and affordability. And I think that will drive the policy conversation as we look ahead. There are many things I think that we can do to enhance affordability and bring more supplies onto the market from a policy perspective. And when we look at all of the changes in this dynamic energy market that we are experiencing right now, there are a few truths that we are kind of sort of using as a basis for shaping our outlook. One is that the world will need hydrocarbons for many years and decades to come, and that natural gas is really very likely to be an important and growing source of energy, no matter your policy outcome. And so we have a real commitment to increase our natural gas production across the U.S., also doubling our LNG facilities, and we have a low carbon solutions business, because not only do we need to produce more energy, we need to figure out ways to reduce the carbon impacts of the energy that we're producing. And so across all of those activities, permitting and public acceptance is a key gating item. And in the U.S. Gulf Coast, we own currently the largest CO2 pipeline network in the country and are building out a carbon capture and storage business against that pipeline that really goes more than 1,000 miles through Texas, Louisiana, and Mississippi. We've got a number of commercial projects underway today and continuing to expand that work. But public acceptance and permitting are slowing us down. This is really sort of, I think, one example of how permitting reform could really unlock more energy supplies and decarbonization simultaneously. We need to get more Class 6 permits, which is the permits needed to inject CO2 underground. There has been progress on this front, but greater certainty of timelines for, really most importantly, would enable faster projects and more carbon to get taken out of the atmosphere. When we think about what else is necessary, it's really this predictability of the outcome that is most important, right? Ending frivolous lawsuits and other things that do sort of just slow us down, that would be helpful. But public acceptance, getting, as you were saying, Marissa, getting, I think, greater awareness and buy-in, not only at the community level, but within the stakeholder community, that really this is the time to build, and it's in our economic and our national security interests to move ahead here, and the outcomes on the other side will be better. The environmental outcomes, the economic outcomes, and we need to figure out a way to take advantage of this moment to get the policy at the federal level, permitting reform policy, across the finish line. What do I think is different now? I'd love to actually hear your thoughts on that as well. I know you're spending a lot of time on that. But I do think, the pressures from the outside system, not just what we're seeing geopolitically, but this real transformation in the energy markets here at home does create an opportunity, and this increasingly unified voice from the conventional energy industry, the oil and gas folks, the renewable energy industry, the environmental community for the most part, other stakeholders, everyone, not everyone, but many of stakeholders. The Venn diagram is aligning now around, let's get this done, let's increase predictability, speed of permitting, and let's get off to the races. And I think that pressure is starting to build, and this is the year to do it.
Yeah.
Just a quick background on Solstice. We are a very recent spin-off from Honeywell, and we are one of 3 uranium converters in the world outside of Russia and China that provides uranium hexafluoride for nuclear energy. So for us, to answer your question, what I think is so critical is recognizing the entire value chain as we try to solve for this dramatic increase in demand for energy. So a lot of talk this week about SMRs and new nuclear reactors. With that, we've got to make sure the supply chain is there when they come online. So for us, as we think about it, and others in that supply chain, that partnership with the government as well as utilities, as well as the SMRs, to align, to balance the market, to ensure that whole supply chain is there, is just critical for success in meeting the energy needs. And so having those conversations, having those partnerships is just critical for the infrastructure and the entire value chain and ecosystem for energy.
These underlying statutes that influence the permitting process right across what is for us a very robust regulatory framework that helps us demonstrate the prudency of the investments that we're pursuing. So you look at the National Environmental Policy Act, you look at the Endangered Species Act, you look at the Clean Water Act, in particular Section 401 or 404, and these are things that were designed a long time ago. The world has changed, and over time, all of those statutes have been interpreted differently by various regulatory bodies and judicial bodies. And so the idea that at a minimum, Congress would step in and clarify the legislative intent, in particular for clean. I know you've got Senator Armstrong coming out here in a bit to talk to folks, and this is something he's quite passionate about, having spent a good bit of his earlier career as a midstream operator. But when you demonstrate need, and I agree that you can't just demonstrate need in a regulatory context. It's super important that we be having that conversation throughout the value chain with those host communities, underscoring the need, the benefit at the end of the day of how sufficient investment in infrastructure is going to lower the delivered cost of energy and help create opportunities across regional economies. That's super important. And when you've got a regulatory structure where you've clearly demonstrated need, you've gone through robust environmental impacts, there's certain statutes that are helping to determine, or giving states or other stakeholders a role to determine, okay, how are we mitigating the impact of those federal decisions that have been demonstrated to be in the national interest or in the public interest. We've kind of lost track of kind of how to get from the beginning, middle, to the end, and agree with Sasha that when you have gotten to the end of the process, due process is important, and stakeholders can seek redress, but that can't also be an endless process. And for us, if a permit has been granted and it's being litigated, if a court finds that there are things that need to be perfected or revisited, remand that to the regulatory agency. The idea of vacating duly authorized permits, again, capital goes where it's welcome, and that is not an open for business sign in terms of attracting necessary investment. We're an energy infrastructure developer and operator. In North America, we move about 30% of the crude oil that's consumed on any given day. About 25% of the crude that exports the U.S. moves out of our export facilities in Corpus Christi, Texas. On the natural gas side, through our transmission and storage business, we move about 25% of the gas that's consumed in the U.S. On any given day. We also have a gas utility company that serves over 7 million customers in Ontario, Quebec, and Canada, in the U.S. and North Carolina, Ohio, Utah, Wyoming, and Idaho. And we have a renewable power business where we develop and operate onshore wind and solar, and we also have interest in offshore wind in Europe. So we're in the energy delivery business. These are capital intensive assets. So we have to have a sense of the fundamentals, and our off-takers, our customers, have to have conviction about supply and demand where there's that imbalance, and we're seeing it today, as my fellow panelists and we've heard the last 2 days have underscored. That's a very strong investment signal in infrastructure, and as a result, across those 4 lines of business, we have $40 billion worth of projects that are in execution today that we'll put into service between now and 2029, another $50 billion of projects that are in development. And it's really across the board where we're seeing pretty strong interest in investment in that infrastructure. And part of it is, again, I look forward to the policy discussion, but if you look at the policy overlay over the last 2 decades, it's very much been, certainly in the context of electricity markets, it's been a conversation about replacement. And this is very much a reality bites moment in terms of the addition that's required. And so it's a uniquely challenging time, I think, for the energy value chain and for policymakers to catch up with those strong demand signals. But it's also a super exciting time to be in the energy space. Yeah. So one of the benefits of having that diverse sort of asset map and business units is that we're constantly engaging with large suppliers to ensure that we've got access to the necessary equipment and components to maintain what's a very robust and integrated system. The demand pull is pretty strong, and ensuring that from a logistics and long-term planning standpoint, we have all that sequenced right is a challenge. But we have a very active and engaged supply chain and procurement team. The workforce challenges, again, I think part of this goes back to sort of the world that we thought we were heading towards versus the world that we're living in today, and the reality that the conventional energy space, the energy ecosystem, there are lots of opportunities. We have the benefit of operating throughout thousands of communities, and so it's important as repeat customers that we're active participants in those communities. And so we spend a lot of time with the trades, with vocational schools, trying to ensure that we've got the workforce to continue to maintain and operate that system. And that's proving to be ever more important given the strong demand signals. But it's a challenge, at least we see it as a challenge. And again, it's sort of that sequencing and pacing that you've got to get right. And some of that is also a function of, all right, you've got capital committed when are you going to be in a position to deploy that capital and put people to work? You know, we have access to capital. We have strong counterparties, a lot of interest in the infrastructure that we can put into service. It's the lack of predictability in terms of the regulatory or political environment that we find ourselves operating in. And again, we're repeat customers almost everywhere. We operate in 43 US states, 8 Canadian provinces, 5 G7 countries. So we have to work in all sorts of changing political dynamics. But the lack of predictability and the durability around permitting decisions is a challenge when you think about how to allocate capital and how to ensure that, you know, when you're looking across all those businesses and you're trying to figure out, okay, what makes sense in terms of the best risk-adjusted return when you're making 20, 30-year bets on incremental deployments of capital. If you don't have confidence in your ability to get from the beginning to the end of a permitting process and be in a position to not just deploy capital, but to bring those projects into service.
Karibu sana, Akwaba, Saubona, Ekabo.
Good morning and welcome to African Energy Week 2025. In this year's Energy Week, we commit to positioning Africa as a true global energy champion.
It is indeed an honor to be here at the 5th African Energy Week. 5 years ago, many of you in this room, you asked us to build something more than a conference. You asked us to build a movement that will speak up for our continent, that will speak up for an industry.
The story of African energy is one of immense promise, and the leading chapters are still being written, supporting a continental marketplace where innovation, investment, and ambition converge. Let us make this the decade in which Africa's energy sector not only meets its potential, but leads the world, driving prosperity, resilience, and transformation.
So by working together with respect, with strong partnerships, Africa's journey towards a just and sustainable energy future will prove it once again. Africa is opportunity, Africa is energy.
It is important to give women a seat at the table on decisions relating to energy security, particularly on the African continent, where the energy industry is opened and the market is opened and widened. All businesses can benefit. Diversity is good business for all organizations.
Africa's time is now, and Africa must take the opportunity now. Capital is very mobile, it's going to find opportunities somewhere. And as long as we can ensure that there's policy harmonization, we can go further together.
Across our continent, we are blessed in abundant resources: oil, gas, solar, land, the wind. We also have all the necessary resources to develop our country.
As we've been hearing from many of the presentations here, there is enormous proven resource in Africa. All over the place, onshore, offshore, everywhere else. But the investors need three things. They need that proven resource. They need a predictable rule of law that if they put their money to work, they can pull money out at the proper time. And three, they need a predictable enough security environment. If you do those three things, a lot of good will flow.
Yes, Africa's energy sector holds immense potential, but the truth is Africa's tired of just saying potential. We want now reality to sink in. We need to have forums that have outcomes that we implement for ourselves.
Over the last few days, we've seen incredible collaboration.
Our future and Africa's future is not for us to predict, it's for us to create. And we create that by driving those new chapters and produce energy for every African. That is a must, and our generation can do it. It is not impossible. Let's go, Africa, and thank you guys so much, and I really appreciate it.